The Chancellor raises taxes in the latest budget. If you are running a business, you are obviously going to be concerned about the tax changes that have been made and the potential attack on your long-term wealth. So if you're looking to protect your assets and that of your family for the long term, then you should definitely be having a look at SSAS, because SSAS has a number of statutory tax exemptions. This is where we now have to get smart when the going gets tough out there and the Chancellor is looking to recoup as much funds for the state as possible. One of the joys that we have is we've got SSAS. It has been around for a very long time, since 1973, so it's a very well-trodden path in that sense. It has been tax exempt as well for the last 50 years, so that is also good news for you. So the first tax that it is exempt from is capital gains tax, or CGT. If you are thinking of acquiring a business asset such as commercial property, or you want to buy land, potentially you should be looking to put it inside a SSAS, because if you buy that asset today and you are looking to sell it, let's say you buy land and you're looking to obtain planning permission on it in the future, then clearly the rise in the value of the land could be substantial, especially if it's going for housing. So you could buy the land in your SSAS, obtain the planning permission, and if it's in SSAS, then the rise in the value of that land will not be subject to capital gains tax if it is held in SSAS. It would be fair to say that the last government had quite an assault on capital gains tax. The personal allowances had been reduced substantially, so it's very sensible now to be looking to protect your assets from this tax and make the best of SSAS, which gives you that level of protection. The next tax we can look at is inheritance tax. Again, SSAS is statutorily exempt from inheritance tax. We found that SSAS is probably one of the best inheritance tax planning vehicles that you can lay your hands on. So again, if you've got money in your company, or you own money personally and you want to get it into pension, it is worth noting that by putting money into pension out of your company or out of your estate, then the funds that you've put into the SSAS are exempt from inheritance tax on day one. Pension SSAS is the only place that you get this immediate deduction. If you give a gift, for example, of money to your friends, your relatives, you obviously lose control of that funds. But there is a 7-year ticking time clock on giving a gift. So effectively that gift is potentially still in your estate for up to another 7 years, which is obviously not great, and you've lost control. Some people, again, arrange to put money into a trust. If you put more than the nil rate band into a trust, then potentially that may be liable to future periodic charges, and again, may not necessarily drop out of your estate. So again, you need to be careful with that. If you're running an investment company, for example, the value of the investment company is in your estate for calculation purposes when it comes to inheritance tax. So if you have an investment company, you may want to now look very closely at how you run that company, and can the assets be moved into a SSAS? Because the SSAS can hold commercial property, would now be an opportune time to look at moving that property into SSAS and getting it out of your estate for IHT calculation purposes. So don't forget, the minute you put the asset into SSAS, it is out of your estate for calculation purposes. The only time it won't be out is if you deliberately put the funds into SSAS if you know you are terminally ill. There are anti-tax provisions to make sure you can't do that. But assuming you're all healthy and fit, put your money into SSAS, make sure you use your full allowances and get that money into SSAS. And because SSAS, obviously, as we've seen with other videos, is a way of cascading wealth down the generations potentially, what better way than to use SSAS to keep the wealth in the family? don't make the exchequer the largest inheritor of your estate. The next tax that we need to consider is obviously if you are investing your funds held in SSAS. Don't forget that SSAS does not pay any tax or income tax on the profits that you are making. So again, if you're looking to do investments, you should always be considering SSAS as your first port of call. Can I get gross returns on my investments? For example, if you hold commercial property inside your SSAS, the rent payable is going to come into your SSAS with no tax on it. So, if you had rent, say, coming into your company, that would be liable to corporation tax at 25%. Let's try and eliminate that tax. Put more profit in your pocket. Get the property into SSAS, get the rent coming into your SSAS, get a gross roll-up position. It's essential. Gross roll-up is one of the greatest things you can do with pension. Also, if you happen to own commercial property and you do have a loan on it, then obviously if the loan is held inside the SSAS and you have gross rent coming in, there is a great opportunity to reduce your debt exposure much quicker than you would do holding the debt in, say, a company or even personally. And again, if you happen to own commercial property personally, you really should be looking to get that out of your estate, avoiding IHT, getting that property into the SSAS, getting the rent coming in gross and saving yourself both income tax or corporation tax, depending on how the property was held, and reducing your exposure to inheritance tax. And of course, if the property goes up in value, you're also eliminating your future charges to capital gains tax. So you can see the huge benefits in moving commercial property and land and other assets into SSAS as quickly as you can following this budget. We'd love to hear from you. How are you feeling about the latest tax changes? Are there any other ways that you've come across that will allow you to protect your assets? Please leave a comment below.
Book a call with us via the link in the description below. If on a mobile device, simply hit the More button under the video title and pick a convenient time to speak. Feel free to share this video with others that may benefit on WhatsApp or in other online groups or channels. Like, subscribe and hit the notification bell for lots more SSAS related content, and leave a comment if you found this video helpful. For more, visit onecrownpensions.com.